Hi everyone, this is Dr. Nitin Choda with Ignition Time. Welcome back to the channel. Today I want to talk to you about the importance of being smart about your taxes. Now, before I start, I want to tell you that I am not an accountant, I'm not a financial advisor. The information I'll share is based on my personal knowledge and my personal experiences. Paying taxes, W-2 employee when I started working, and then paying taxes as a business owner. Now that we have the Trump administration, the Republicans, and they're traditionally pro-business, I can tell you that the advantages from a tax standpoint for businesses are way greater tax advantages for someone who's earning a paycheck. Now, what do I mean by that? I'll talk to you about the importance of what's called as a tax deduction. For a business, any expense that's a legitimate expense for a business is considered a tax deduction. Now, what does that actually mean? I'll throw out a number. Let's say you earn $4,000 a month. Now, the way our system works is you'll pay taxes on the $4,000 and then you'll get what's left over. So you'll probably get anywhere from $2,000 to $2,500 because the federal taxes and the state taxes are deducted from your paycheck. Now, you're also paying taxes for Social Security, Medicare. You're actually paying into those. If you take a closer look at your paycheck, you'll see that all of those things are actually deducted from your paycheck. So that's how it works for someone who's a W-2 employee, who's earning a wage, who's earning a salary. Now, if you're a business owner, let's say you earn $4,000 as a business owner, but you legitimately spend, let's just say $3,000 for your business. Let's say you use your car just for your business. You use your cell phone just for your business. You market your business. All of those things are considered deductions. So let's say you earn $4,000 through a business, as a business, and let's say you spend $3,000. You'll actually only pay taxes on $1,000. That's basically how it works. Now, let's say you're earning $4,000 and you have an employee and you pay the employee $2,000. What you pay the employee also becomes a tax deduction. Now, let's be clear. The government does get their money. Now, let me be clear. The federal government does get their money somehow because let's say you pay wages to someone. They now pay federal taxes, state taxes out of their paycheck. So the federal government, they want to get their cut somehow. Now, here's what's interesting. If you're someone earning wages, there's not much you can deduct. You simply can't because you're not a business. But if you are a business, if you set up an LLC and let's say you are an independent contractor and you're earning and you're working for clients and they write you a check to your business, then things start to get really interesting for you because now if you are an independent contractor and instead of getting paid, so let's say your name is Susie Smith, right? If Susie gets, that is essentially Susie getting a check as an independent contractor, and typically depending on how much money you get, the person who gives you the check issues you an IRS form 1099. Basically they say, hey, I paid this person money, and then you have to tell the IRS you made the money and you pay your taxes on it. But if Susie had a company, going to say Susie's Cupcakes, and if someone wrote a check to Susie's Cupcakes, now every time Susie buys supplies, pays the phone bill, pays the utility bill for her place of business, or even if Susie works from home, let's say Susie works out of her kitchen, all the expenses that Susie incurs in the kitchen to make those cupcakes, whether it's buying supplies to make the cupcakes, the utility bill, the portion of the utility bill that was used to make those cupcakes, let's say Susie bought some things for her kitchen which she needed in order to be able to facilitate her business. All of these can be legitimate deductions. So the way you really have to look at this is, what is better for you long term? Is it better for you to be a wage earner, which I'm sure a lot of you are, or might it make sense for you to start an LLC, start some sort of a company? And it's not that difficult, by the way, to start a company. You can just Google start an LLC in your state. You can probably go to your state website and start one without too much trouble. And then if you do any independent work, if you do any independent consulting, you work with private clients, they now write a check to the company. And then as a company, you can write off legitimate deductions, which means you now pay taxes only on what's left over. and not on everything that you earn. Because think about it, if you're a wage earner and you cannot write off your cell phone bill as a deduction, you cannot write off your utility bill as a deduction, if you have any insurance costs, you cannot write those off. But if you're a business and you use your cell phone for work and you use your car for work, you buy gas, you pay insurance for your car, these are things that if you use them for your business can be tax deductions. And I think that it's really important to understand this, because if you earn, let's just say you earn $50,000 a year, after you pay taxes you have maybe $25,000-$30,000 left over. But if you earn $50,000 a year as your business, now things start to get really interesting, because now after you write off all your expenses, you're probably paying taxes on maybe $30,000-$35,000 a year. Again, you will need to talk to an accountant to get more information about this. There's an excellent book on Amazon. It's called Tax Free Wealth. You can check out. I'm a big fan of Audible. I listen to Audible. But when it comes to your financial future, I can tell you that the government doesn't care about your financial future. You have to plan your own future, and I think you have to be very, obviously do the right thing. You have to do things that are in compliance with laws and with the IRS, but you do have to think seriously about potentially operating as a business. And when you operate as a business, you have advantages which normal wage earners don't have as a business. You can qualify for business lines of credit, business credit cards, business loans, which tend to be bigger than what you would get as a, if you have a personal credit card, you maybe have a $5,000-$10,000 limit. If you have a business credit card, as long as a business has been in existence for a couple of years at least, because a lot of banks want to see businesses that have been around. So even if your business isn't making a lot of money but has been around for a couple of years or more, don't be surprised if you get a business credit card with a $20,000, $30,000, $40,000 limit with 0% interest rates for 9 months, 10 months or more. Because our country, and also more importantly the incoming administration, is pro-business, because the underlying expectation is that businesses will create jobs, businesses will lead to more spending, which is a good thing for the American economy. As long as you have a business, you have advantages that as a wage earner you simply do not have. I want you to think about this, and if you have any questions, type them out in the comments section below, and also start to research how you can start a business in your state, because the rules for starting businesses are in different states, but it's not that difficult. You don't need a lawyer, specialist person. You can just Google it and go to your state's website, set it up, and once you get a business, you need to get what's called as a tax ID or an EIN, an employer identification number for the business. All you got to do is go to the IRS website and you can get that instantly. Then you simply take the business registration documents, which the bank will give you. You take the EIN number, which is a tax ID number, which you get from the IRS website. You go to a bank, show them those two documents, and boom, you have a business checking account. Now, when you get checks from clients, you deposit them into the business checking account, not your personal checking account. You deposit them into the business. Where you go, you can apply for a business credit card, start to get some deductions going, and as long as you do some research about how to manage books in a business, you can probably even file your taxes on your own using software. But if you're not sure how to keep records in your business, what you can deduct, what you cannot deduct, is probably best to speak with an accountant. But again, operating under a business gives you advantages that you simply don't have when you are a wage. Thank you so much for watching, everyone. My name is Dr. Nitin Chhoda with Ignition Time. I appreciate you watching this video. Please click like, subscribe, and enable notifications so you can get alerts whenever we launch future videos on our channel. If there's any topic you want to see, let me know. This channel, the Ignition Time channel, is about the country, the economy, as well as your money. And my goal is to help you not just find your place in this new economic world that we live in, but to make the coming years the most successful, the most fruitful, the most positive years of your life. Thank you so much. I'll talk to you soon. Take care. Bye.